All right, we should be going live any second. Let's see, playback. Oh, is it still? Oh no. Let me go make sure. Well, he has your link. I wonder if it like changed it as soon as we went live. Embedding. Mine's on still, so. Is your embedding still on too?
Stonks, yeah, looks like we're live on Stonks.
Okay.
Yeah.
For some reason it says I can't watch it. What the heck? What are you doing? Is it live on Stonks.com? Can you see it?
Yeah, it's live on Stonks.com.
Oh, awesome. Well, yeah, mine was like, I'm not having it, so.
Yeah, yours is live as well, and the Stonks.
Okay, sweet. Let's go. Heck yeah. Well, I was wondering. I knew I could see it on my stream, but I didn't know if we could see it on Stonks, so we should be good then.
Okay, let's go.
Let's get it. All right, guys. Welcome to Stonks Daily with your host, Jason, and the founder here, Murdy. Let's get into what we're going to be talking today, which is JP Morgan and the what the analyst says could be the bank stocks comeback. Let's dive into this a little more and see, obviously what me and Murdy think, and then we can, obviously we'll go through some articles. And if you guys are watching right now live, you can go over to Stonks.com, enter our new game, win some free cash. Right now you can bet on where the stock price will be on the live stream here on Stonks.com. If you come closest at the end of the live stream, you will win some money. There'll probably be multiple winners. So you don't think that one person is going to win all the money. They could win all the money, but usually we have more than one winner. So everybody can make out like bandits and and be good to go. It's a pretty awesome show. Hope you guys enjoy it. But yeah, we'll deep dive in here into JP Morgan. We'll probably talk about other things as well, but most of the things today is going to be about the banks and maybe some bank stock comebacks, obviously, since banks have been down for a minute here. So let's get into it. Murdy, what do you think about JP Morgan and where we're going and other banks?
Yeah, so I'd like to do a deep dive into JP Morgan.
Yeah.
I think there are interesting factors that are different for JP Morgan compared to the other banks. And so, there's two decisions here. One is, are the banks a buy or sell? And then two, is JP Morgan specifically a buy or sell? And they're reporting earnings tomorrow morning at 8 a.m., I think, or 8:30 Eastern. So, it's a good time to talk about them and see if you want to buy some last minute calls.
Ain't that the truth? We're all trying to chase the money game on the stocks, and especially on the options.
Yeah, I mean, generally my advice would be for most people not to touch options, but it's telling people not to drink or not to gamble. It doesn't work.
That is the truth.
And just look, this is not financial advice. We are just giving you our opinions. Please do your own research. This is not financial advice.
No. I agree about that. So make sure you guys, we're not we're not financial advisors. We don't claim to be financial advisors. We're just here to talk stocks and hopefully you guys learn a couple things and also just have fun and play the games on Stonks.com and win some free money, become part of the community there that we're growing. Hope you guys like the site. And like I said, if you have any questions on the game or how it goes, just pop them into the Stonks.com chat. And as somebody there will also answer you as well, or you put them in there and we can also try to answer any questions. If you guys also want to have any feedback or just want to talk about a certain stock or something like that in the bank space, especially right now, just let us know in the chat as well. We can go over some of those things too.
Let's do it.
Heck yeah. All right. You want me to pull up the things we have to talk about here, and then we can just roll from there. Awesome. Let's share the chat here. Let's go. Some share screen. Let's see, share screens. Screen share, yes.
Yeah, so high level, here's my decision tree or things I'm at least considering about JP Morgan.
Yep.
JP Morgan is a very big bank. It's the largest bank in the world. And so at this point, generally they're going to track the banking sector. It's like buying an ETF on banking, really, when you buy
100%.
right? And so I generally dislike stocks like that because there isn't much alpha that you can get because it's just if the economy tanks, JP Morgan is going to take a hit. The economy does well, they're going to do better. And so
Yep.
there's really not much alpha there. But I think there's been 3 or 4 interesting developments in the last 12 months for JP Morgan that I think are very specific to them. And so that's what I wanted to talk about here. So let's talk about the first one.
Okay.
And this is kind of funny, and we try and keep it funny and light here.
Yeah.
But they just chopped the head off of their chief strategist. So the chief strategist at a bank like JP Morgan is basically the guy who has an opinion, and that becomes the bank's opinion because that is the recommendation that the bank, like all the minions under him, are making to their private wealth management clients. And I'm actually one of those clients. So JP Morgan Private Bank is sort of my money manager, and this was the recommendation that I got from them as well for the last 12 months or so. And so this guy, Marko Kolonovic, was their chief strategist, and he was predicting a recession, a bear market, call it whatever, for the last 12 months at least. But even much before that. And the market has been up rather than down. And what's interesting is Jamie Dimon, who's the CEO of JP Morgan, was echoing Marco's comments for the last 12 months. So every time he was on CNBC, Fox News, wherever, he would be like, look, recession is coming, hard landing is coming, blah, 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 watch out. And none of that has happened yet. And so I think JP Morgan, their clients who have lost billions of dollars because of this recommendation, wanted some blood. And JP Morgan had to deliver his head on a silver platter. So,
100%. Yeah. Now he's definitely been calling for, obviously a bear market ever since, stocks, I feel like at least, since stocks fell in like late 2021 and 2022. Like at that point, he was calling for, obviously the blood markets, in which we had some blood. But I mean, at the end of the day, the stocks had ran so high that it was ridiculous. Like I think we all knew it was going to come down. But I think even at the points that when we came down, he was still calling for the stocks to go further down, which at that point, I feel like we had so much of a sell-off. It was like, okay, we're probably going to ride sideways. And then, maybe we go down a little bit, but eventually we're going to go back up again, which is what happened. And like you said, he was calling for obviously blood markets all the way through now. And we've had such a, another historic run at this point that obviously, some people were saying like, there's no way we don't have at least some sort of run. At the end of the day, I think he was more playing off of what he was seeing in terms of inflation and things like that. But I think we all knew that inflation was going to be sticky, but I don't think any of us thought that inflation was going to be like, 1970s type inflation or something like that, where it was just like, crazy. Pays kind of kept up. Well, some pays, obviously, in some markets kind of kept up with some of the inflation. Like obviously at some points it was higher, 100%, when it was like 9%, 8% inflation. But since inflation's came down, and obviously I'm talking about more of core inflation, not really like overall inflation in terms of like grocery prices and things like that. But even like me personally, on that side, I still think that's just a lot of market greed when it comes to these companies. Like I 100% they could be slashing prices. They just know that we're going to pay for it anyway. And they're going to keep prices up as high as possible, as long as possible. So
dude, have you seen the price of a Big Mac in California?
Yeah, it's ridiculous. I mean, look at the price of just look at a double cheeseburger from McDonald's. It used to be like $1.50 or something, like $1.49, and now that thing right there is like $3.50 now. Just for it's ridiculous. Like, what is going on here? And again, like I said, McDonald's could lower those prices and still make money off of it. They've seen that people are willing to pay that price, so now they're finding it hard to even pull back prices, right? It's like, I don't want to do that. But then you have like some of these like grocery trains that are like, we're going to be dropping, prices 10% or something like that to help with inflation. Well, you could have been doing that the whole time, but but we all know that you're just here to, again, again, it's a corporation, so I get what they're doing to try to make as much money as possible. But man, it's like, some of this inflation right now is just drove by corporate greed too. So it's not all just, because, the last, two presidents spent like, they're going out of business over here. So it's definitely some of that, obviously the last two administrations definitely has spent a lot of money, but still, I think some of the inflation isn't just because of that. It's just because of corporate greed, even after the pandemic, pretty much.
So California did something even more interesting is they increased the minimum wage for specifically fast food workers working at large chains. They specifically excluded one chain. What's it called? Bakery that serves food.
Yeah, I've heard. I know what you're talking about too.
Yeah. Which was a big donor to like Newsom's campaign, so they excluded them. Everyone else has to pay. I think it's $22 an hour now. Which
I mean, it's definitely a thing. Like I said, to me, it's like obviously like do I think like the minimum wage whatever should be higher? But yeah, obviously like $7 is ridiculous. Yeah. But like obviously like some things like $22 an hour is like, okay, well, it's kind of crazy too, right? So you got extreme size on both ends, and it is kind of crazy, like you said, with like Newsom. He's like excluded one of his biggest, campaign donors. Like, and I guess obviously it pays to know people in America, but it's still kind of crazy. Like those kind of things do happen. I mean, there's a lot of that happens across like a lot of different states when it comes to like certain places getting excluded for this or for that. And again, most of the time it just becomes like who you know and like who you gave money to.
Yep. All right, back to JP Morgan. So, I think this is a very interesting sign. Now, this doesn't mean, we're not going to have a recession tomorrow. And this guy, Andy, was actually, Marco was actually right. And all along, right? It's impossible to time the markets. And, clearly this was a very smart guy to become the chief strategist at JP Morgan, right?
Yeah.
But I think it signals that the largest bank in the world is pivoting their stance, which was recession's coming any day now, to, oh shit, we got it wrong, and let's sacrifice, our chess piece, our bishop or a knight here.
Yeah, that's 100%. Yep, I agree with that. Like I said, at that point, it's you try, like, again, you're sacrificing to make yourself like look good to your investors and people that are using you for investments. It's like, okay, look, we got rid of this guy, so even though you guys lost out on a lot of money you could have made, we're going to make it right by chopping this guy off. And does it make it better? No, but does it feel a little better, like knowing that the guy who made the stupid decision's gone? Yeah. I would hope so, right? Like, it's still going to burn no matter what, because it's like, we could have just put our money into the S&P and made 17%, but we didn't do that. And hey, here we are, right? So it does make it feel a little better, but it definitely doesn't, make the pain any less, to be honest.
Yeah, it's funny. Every few months, the guys at JP Morgan ping me trying to like manage my money, because I keep my money there, but I don't let them manage it, right? I manage it myself. I do my own stock picking.
Yeah.
And like they're all convinced that they're superior than us. They're all convinced that they're like smart money managers will outperform. And like based on what we saw yesterday with the hedge fund data and like this, I mean, it's kind of hilarious that anybody trusts anybody to manage their money, to be honest. Like it just seems like a coin flip, like whether things will go up or down. And like if you get it right, you're considered a genius, and if you get it wrong, they fire you. But like it could have gone either way.
No, 100%. Like, and that's the reason why most people probably should just be putting their money into the overall market anyway. Because at the end of the day, it's like, okay, look, like you're gonna usually, like, obviously average out, you're gonna have some down years and up years, but average you're gonna get like 8 to 10% back anyway. So it's like at that point, it's like, okay, do I pay somebody? Again, like I said, it depends on how much money you have, and how much money you're putting into the market too. But the average American, like, just put your money into the overall market and let it sit. and don't touch it, right? And then obviously max out your Roth IRAs or whatever else you're doing each year, and just let it sit, let it ride, and one day you'll probably have a lot more money than you put in.
I'm curious what this guy's going to do next. Like, what firm is he going to join? Will he start his own firm and try and stick it to JP Morgan? Yeah.
I mean, if he does do that, like, you imagine, like, the market does fall and like he sticks it to JP Morgan, like that would be wild in its own right, in terms of just like, I can only imagine the blowback that, like, obviously JPM would get for them for firing him. But again, he was wrong for multiple years there. So it's like, hey, look, he's just, at this point, he's like everybody else. He's just trying to, at the end of the day, he's trying to guess the market, which you can't do. And as we've all seen, like, even with the pandemic, like, we've seen the market crash for like a whole like week. And it was just like rally mode on. Like, who would have thought about that, right? Like, everybody's like, we're at home, we're not doing shit, and then out of nowhere, you had like these crazy stocks going on run. I mean, look at Etsy, right? Like Etsy, like I would have never thought like a stock like that would have ran as much as it did. Like, it did just like continue going. I was like, man, this stock is ridiculous. But it's just like the most like random stocks. And then I get that everybody's at home, but it's just like, to me, it's like the market should be down still, but they're not down. So I don't know what's going on, but I'm just going to put money in the market like everybody else. It was definitely a wild one at that time.
Yeah, totally. So for people who have just joined, make sure you get your predictions in. We have 15 minutes remaining until the markets close.
Yeah.
And so hit that make prediction button. And the game today is you're basically trying to predict the price of JP Morgan 30 minutes after close. So at 1:30 p.m. Eastern Standard Time, whatever the price is, we're going to lock it in, and then whoever comes closest is going to win a cash prize.
Yeah, awesome. Yeah, so if you guys go to again stocks.com, sign up, and then as soon as you sign up, you're making a little account, and then once you get onto there, you can make predictions on the stock price. And if you're closest, like I said, but right now we're giving away $100 a day. But next week we'll be starting $1,000 a day, so it's free money. It's an awesome thing to do. I honestly, you guys are gonna have a lot of fun on the site, and we can't wait to see you over there.
Mm-hmm.
All right, let's go to head over here to the Federal Reserve Board.
Sure.
Let's do it. I'll let you lead.
So here's another interesting, and again, this is all kind of related to JP Morgan, and what I'm really trying to uncover here is there a specific story to JP Morgan that is not tied to the broad macroeconomic climate? And if there is, is there a hypothesis to buy JP Morgan? Now, my personal investing style is I like to buy things on call it a 6 to 12 month time horizon, no less than that. More than that, of course, but no less than that. And so what I'm really trying to identify here is there like a 6 to 12 month catalyst that JP Morgan has? And so here's another one that just happened. And again, I went through this personally, and I think a lot of people working in tech and startups have been through this, where there's a bank called Evolve Bank and Trust. That is the back end of a bank called Mercury that a lot of startups use for their bank accounts. And then Evolve Bank and Trust is also the back end for a lot of fintech companies. And so Evolve had an action taken against them by the government, essentially, for very questionable business practices. And they've been placed under, I don't know what the technical term is, but basically like the government, the Federal Reserve Board, the FDIC are taking control and like making sure things go well and they don't lose people's money. And so plus they've had like a data leak as well. So every single customer for Evolve Bank and Trust, all your data has been leaked, including social security numbers. So if you are a customer of any of these fintech companies, you may not even have known Evolve Bank and Trust is a thing, like you were never directly working with them. But in the back end, they ran the back end for a good percentage of the entire ecosystem for fintech companies. And so so there looks like they're going under / have gone under ish. And so and this reminds me a lot of, if you if you think back last year, what happened with Silicon Valley Bank first, and then First
Oh,
Republic.
yeah.
And so I was again a customer of both of them. In fact, all my personal accounts were held at First Republic Bank, and that was a
Yeah.
great bank. It was honestly the best like customer service I've ever gotten from a bank. They were the
Yeah.
nicest people over there, joy to work with. And then suddenly one day they went under. Why? Very specifically because they bought treasuries at 1%. Interest rates went up, so the value of those treasuries that they bought plummeted because these were 30-year treasuries that they were buying for some godforsaken
Hmm.
reason because they thought they were safe. Um, and there was a bank run. And
Yep.
JP Morgan actually bought out First Republic Bank, rescued them essentially. Uh, and I can't remember who bought Silicon Valley Bank, but it
Yeah, I
was
couldn't
another.
remember who it was. I know obviously JP bought
Yeah,
First Republic, but I couldn't remember which one bought that one, the other one. But it is crazy. Like I said, like we started. I honestly at that point, I remember when both of those went down, like pretty behind one another, like within it wasn't that long apart. And like honestly, I figured we'd see a lot more, and I think there is a few more too, obviously, right? That are like pretty much teeter tottering.
there are. There
Yeah.
definitely are. There's another five
So
or 10 that are right on the edge.
yeah, so there's definitely some that are like teeter tottering there. I honestly, again, I think we'll definitely see more banks kind of, bank runs.
Hmm.
It is kind of crazy to see, right? Like, everybody's like trying to get their money out, and obviously
Hmm.
the bank at that point is just like like they don't have the money, right? It's all, yeah. So it's like it is just kind of crazy we're seeing that at this point. But at the end of the day, like I said, that's honestly just what happens in this kind of market environment when everybody starts freaking out about like one little tiny thing, and then out of nowhere you have everybody trying to pull their money out at once, which obviously can't really happen. The banks don't really keep that much on hand.
No.
So yeah, so it turns into this, like you just talking about, where it comes into that where everybody's just trying to get into the bank, right? You've seen those like way back when you could, with the black and white photos of people like outside the banks, right? Like trying to get all their money out. But you imagine it now, like everybody's like trying, at least now these days, obviously some people are probably going to the bank, but some people are trying to just transfer the money, right on their computers or whatever, and it's like not letting it, go through. So you can only imagine like how hectic that would be. And like you said, you went through it, so thank goodness I haven't. So, but overall, like, yeah, I'd probably be freaking out too. But
I'll tell you, like the weekend where I was like, oh shit, they're collapsing. I got
yeah,
an intro to a banker at JP Morgan,
yeah.
and he literally transferred assets over the weekend. And I didn't know if they would like even leave First Republic at that point. It was, I think, we did a wire like minutes before Friday where the wire deadline closed, and
Mm-hmm.
moved everything. And thankfully, the wires cleared. But there was a very
Woo.
real chance that they wouldn't clear.
Yeah,
Um, but
that's scary too.
my guy at JP Morgan told me that when First Republic went down and Silicon Valley Bank down, um, they literally had their best day ever, like for 60 days in a row,
Shit.
right? So
That
like there's
is.
this huge transfer of assets that normally would never have happened, right?
Mhm.
Just because everyone's like fleeing the ship, like you know. So what happens if there's another catalyst 12 months from now or 6 months from now with commercial real estate blowing up, or
Yeah,
that's probably the most likely thing to blow up at this point.
I would figure too. Yeah, honestly, just
And
because it's been so bad for
yeah, and
commercial.
what happens if another five banks fail, like small regional, maybe mid-sized banks fail? Where do you think those customers are going? They're going to go to the biggest, most secure bank,
Mm-hmm.
regardless of their fees or regardless of whatever, because you don't want to lose your
Yeah.
money.
Yeah,
and
exactly.
and
Yeah.
JP Morgan is the most stable, reliable bank in town right now.
No, I agree with that too. That's kind of the way I look at it. It's like, obviously, especially as just like a regular everyday, like, again, like a citizen in America, like when you think of like a bank, especially like more of like a smaller regional or even a mid-sized bank that fails, like, yeah, 100%, like the first thing you're going to look at is like, which one's the biggest bank, right? Like, or at least the top like three. It's
Yeah.
probably you're going to look for. It's like, I don't want to go to a smaller bank anymore because that happened, right? So at that point, you're not even willing to take a chance anymore. So you're like, I'm just going to go to the biggest bank. So yeah, it's 100% what's going to happen. And, obviously eventually, and again, like I said, we're probably going to see another, 3 to 4 banks fail. That's what I feel like, at least, especially if we see the commercial real estate, kind of just let out finally. which has kind of been, like little air getting let out at a time. But eventually, I kind of see that happening too, where, commercial real estate will probably eventually at least have some sort of like big, collapse in terms of like, maybe it's not like a massive one, but more than what we've had right now, at least. And then I think at that point, we could see some other banks start to falter. And then again, like those people are going to go to like the bigger banks in America, right? So they're probably going to look it up. Yeah. And again, almost every city like, at the end of the day has like a Chase in it. Yeah. So that doesn't like, so it's like an easy one they're going to go to.
Yeah. And to be honest, like I would never bank with Wells Fargo after the shit they've pulled over the last 10 years.
No.
They're like people. And Citibank has its own like set of issues, like, right. So like there's really like Chase, JP Morgan is really the only like I think game in town at this point.
Yeah, no, 100%.
And they're too big to fail, right? Like that they're never going to go out of business, even if there's a bank run on them, because the government will bail them out.
Yep. Exactly. Like I figured probably like eventually like I'd say like top like 5 to 10 banks will probably like never go under at least. Mm-hmm. Now eventually some of them probably would, because we had a couple that were up there as well that already kind of failed. Mm-hmm. But you figure at least the top 5 in general, and like you said, the top 3 for sure. The government's going to back them no matter what. So you don't. I would never see a JP Morgan like failing in terms of like all the way. So that's kind of the way I look at it too. So it's like, hey, if I'm going to put my money in, again, that's where my money's at too, is Chase. So overall, it's like that, and then obviously I have my my other side stuff that's in obviously it's in SoFi, which SoFi is a lot different kind of bank. Mm-hmm. And that's just because obviously if you have a savings account with them, you get like 5% interest pretty much. Most of my money's in Chase.
Jason, it's been so interesting that SoFi has been offering 5%. Robinhood is offering 5%. Mm-hmm. And yet the large chunks of money don't seem to leave, the safety of JP Morgan or, the big banks. Yep. You would think that at those rates, like a lot of large pools of money would have left in SoFi. Like I'm a shareholder in SoFi. And,
me too.
But they only keep going down and down and down. And I'm like, dude, like, what's going on?
It is kind of crazy. Like, I agree with you. Like, as a shareholder of SoFi too, like, I do think they have, like, I honestly still think they have a future. It's just like, when will they hit that area where they start having the uphill climb? Mm-hmm. Obviously, it seems like the last earnings, like, obviously was like on the uptrend, but like I said, is that going to be like for everything, or are we going to have the next earnings going to be another downtrend, right? You never know in this environment, but yeah, like I said, as somebody who's obviously invested myself into SoFi, I do think that is like the banking of the future. But I also think you're never going to get rid of like, bigger banks having most of the money, right? To me, again, SoFi is just for like an extra savings account where I put money for the 5%. And obviously I'm not putting anything that's not, in that bank, at least it's not, I guess at least, backed. Because I don't want to end up, with that. So again, most people, or at least most companies, is what they're going to put their money into these bigger, chains like a Chase. That's the way I look at it. I don't see, like you said, I don't. At least right now, I don't see for foreseeable future like anybody going out and putting above the FDIC limit of their money into into something like a SoFi right now. At least I wouldn't. It's too risky.
Yeah, they're actually reporting earnings on the 30th of this month soon.
Yeah.
That's going to be interesting. I'm half tempted to buy some call options on SoFi, just because they're so beat down, and yet every time I do that with a stock that's beat down, I get beat down.
Yeah, no, it's wild though too, because they're so far beat down. It's like, man, how much further could it go down? But I mean, I guess you really just never know. Like, it is kind of. I'm hopeful though that if we are going to be able to see a bank come back, I do think SoFi is obviously going to have some sort of run on that. They're not just going to miss that altogether. Mm-hmm. But I've actually thought about call options too, because if we can get like another decent, at least an uptrend, like that, at least put 2 earnings back to back that were at least decently uptrending a little bit. But we'll see how it goes.
Yeah. Cool. Let's so yeah, we have about 5 minutes to go for markets to close. And so if you're new here, please go to stonks.com, hit the sign up, hit the make prediction button and try and predict the price of JP Morgan 30 minutes after close. And
Yeah.
whoever gets the closest will win real money. We have $100 to give out today, and starting from next week, we're gonna bump this up to 1,000.
Yes. So if you guys are on the YouTube, you guys can hit there's a pinned comment too on one of the channels. You should be able to go to it, hit it, and it should take you straight to stonks.com. As well as a little link there. It's posted at the top. You'll see it. If you click on that, you can go and make a quick account over at stonks.com. If you guys want to win free money, you just guess the closing price when we end the stream, what that price is going to be, and then if you're the closest, you win money. You don't have to worry. It's not like most of the time you're going to see like multiple people win money. So like I said, it doesn't take anything. It's free. It's pretty cool. It's an awesome game. We're also building an awesome live stream community over at stonks.com. We'd love to have you guys over there. If you guys love the financial content, which you guys are here to watch that, so I'm guessing you do. So we would love to have you on stonks.com. Become a member. It's free, like I said, and you can win some money. $100 today, $100 tomorrow we're giving away, and then starting next week we're going to ump this up to $1,000 a day. So hey, free money, guys. Don't pass it up.
Yeah, and then if you run out of entries, you can do some tasks daily. You can follow us on Twitter, follow us on YouTube, refer a friend. There's a whole bunch of ways to like earn more entries. And so you can, if you see people joining multiple times, that's because they did some of that and they have extra entries. Otherwise, everyone just gets one a day.
Yep. When you do your little entry at the top, it'll say like obviously enter here, and then you can click on that, and then after you enter, then it'll allow you to again share the link to your socials, and then when people sign up through that link, you guys will get your extra tokens to be able to guess some more. So that gives you guys more guesses, so more chances to win. Like I said, it's all free. We're never going to ask you guys for money on our end. We're just here to build a community around everybody that is, and it's going to be awesome. So love to have you guys on the channel. Make sure you guys click on that pinned comment. Come over to stonks.com.
Sweet. All right.
We can move over here to the Wall Street Journal.
So here's another catalyst for JP Morgan. So there looks like Congress is thinking of yet more regulations for the banks. Oh, we just had someone new join. Hey, Nikki, if you just joined, hit the make prediction. Oh, bidding is closed. Okay, never mind. Sorry, we just closed bidding.
Well, tomorrow you'll be able to come back, same time and bid. So if you guys missed out on the bidding today, if you guys missed out on it, remember we're doing this every day. Wherever you came from, like I said, you'll be able to get notifications as well. But we'll be having this live stream every day, pretty much towards the end of closing, and then again after that, like I said, once we get close to the end of our stream, which is usually around like 4:30 ET, and that'd be like 1:30 obviously ET Pacific time. Then once that closes, whoever's the closest will win. Like I said, usually there's multiple winners though, so and you get multiple chances to enter if you guys share the links. But yeah, let's go back. Let's go back to the good old JP Morgan morning customers.
Yeah, so JP Morgan, and so the Congress basically was like, hey, we're gonna put some more laws in place and blah blah blah. So JP Morgan's like, okay, great, thank you. We'll just charge people more. And so the proposal here is for them to charge, I think, $25 for a checking account for all their customers. And what's interesting is if you look at JP Morgan's breakdown, like revenue breakdown, 44% of their revenue comes from consumer banking, 30% comes from investment banking, and 12% comes from asset management, and 10% comes from commercial banking. So basically, the largest chunk of their revenue base is consumer banking. It's going down to your local Chase branch, doing a wire, and they charge you a fee, or the credit cards that they do, like and if they just turned around and they have like, I think 80 million accounts, and they charged everyone $25 or more per account, maybe, or whatever it is, that's going to add up very quickly overnight as a catalyst. So they'll literally like add like tens of billions of dollars in revenue overnight.
Mm-hmm.
For a company where the revenue is essentially flat, right? So this year they'll do about $165 billion in revenue. Next year, the forecast is for exactly the same. It's 165. So it's flat. And so the
Yep.
moment you can have a catalyst like that, that can just give them another 10, 20% boost that the market hasn't priced in yet. Okay, that's interesting. So yeah,
No, it's definitely interesting to think about, right? Because, like I said, they could, obviously, they have so many customers that, again, aren't going to leave anyway. Even if they do up some prices, like they're not going to leave. So, like you said, they could just pretty much turn the water spigot on, add more dollars to the bank account, and so obviously the overall revenue, which again will boost stock prices. Let's be honest about it. Like it should boost stock prices 100%. As soon as that law gets passed or does get passed. Like you'll obviously, as soon as it gets passed, you'll see people buy JP Morgan before that thing even takes effect, because people are buying JP Morgan for a future purpose. Not, again, they're not waiting for JP Morgan, not, the hype. That's not how the market works. That's not how the computers work either, because obviously computers were buying and selling stocks as well. So what's going to happen is you'll see a run on like who can get in to buy the stock price more before it goes up. Obviously computers win out a lot of times, but there's going to be some people out there that are watching and waiting for that. As soon as that happens, as soon as that law passes, they're already going to be buying. You'll see people buy it as soon as the House passes, before even this goes to the Senate, just as a catalyst, right? So it's definitely going to add, some free market, to their cap for sure.
Yeah, the irony here is Congress is trying to limit the amount of money JP Morgan makes by capping their fees, and they're just going to charge more in other areas. And yeah.
No, yeah, 100%. I agree with that.
Yeah, hey, Jason, you've got some
Yeah,
more fans in the chat.
Rich.
Which
What's
is
up, man? Hey, man, how you doing, brother? So we're building something new. It's called Stonks.com. Rich, come on over, man. It's Stonks.com. You can enter to win free money. It's literally actually is free. So we're just doing some stuff around stocks. The whole site is, live streaming in financial markets, especially obviously, built around stocks heavily right this second, and that'll kind of grow as we grow. But yeah, man, you come over here and click on the Stonks.com. I have it pinned up top, and join. Love to see you in the chat over there too. Like I said, each day there's a game, you can join that game. Pretty much you just predict the stock price. Each day we'll have a different stock. At the end of the stream, if you predicted the stock price, like obviously if you're the closest to predicting the stock price for that day, you'll win money. Starting next week, that money goes up to $1,000. Tomorrow will be $100. And that goes for everybody. Everybody can join in. It's super free, man. It's awesome. So yeah. All right, let's get back into it.
All right, next one.
Let's go.
Okay, we talked about this one.
Oh, we already talked about that one. Great. Wait a second. Which one did we pull up? So 1, 2, 3, 4. Did we talk? Oh, I must have tapped both of those. Hang on real quick. Let me pull the other one up. I must have tapped both of those market watches. See, Federal Reserve. Let's see, customers pay. Federal Reserve. That might have been all of them, actually.
Yeah.
I think it is. I think that is all of them. So my bad. Thought there was the next one. But we'll just put it on Yahoo Finance in general, obviously, right now, because it's usually what I look at too, and I know Murdy does as well. So that's what you pay a lot of money for lots of different things, and
we use Yahoo
Finance. Yeah. Then you end up using JP Morgan. So it's like, let's go.
I think another interesting catalyst for JP Morgan, but this would apply to all banks in general, not just JP Morgan, is, there's so many friends I know who have not bought a house, who wanted to buy a house, they wanted to move, but the interest rates where they are today, it makes no sense to start a new mortgage right now, right? And so I think there's a ton of people just waiting on the sideline to okay, when are interest rates going to start coming down, and I can finally go buy that house or move to the city I wanted to move to, or wherever.
Yeah, no, 100%. I agree with that.
And mortgages are one of the biggest drivers of revenue, and so is there a good amount of latent sort of demand? At 8%, nobody wants a new mortgage, but at 5%, suddenly do
I
20
actually
million
even think
people want a new mortgage?
actually even think like if you can get down to 6%, I think we'll see a lot more buyers. Because obviously, even 6% historically is not at high, really. If you look at historic averages, like 6% is not high. I think we all just got spoiled by the 2008 market crash, where we had like obviously interest rates slashed for so long. That I honestly think 6% is not bad. Personally, obviously, it does cut into like how much a regular person can buy. In terms of like obviously that payment's going to go up, but I still think just like overall, if you look at it, it's like 6%, it's not bad. You buy in at 6%, and then if markets do come back down to say like 4%, then you just refinance. Like you pay a couple extra dollars, and in the long run, you're still going to save a ton of money if you just refinance. Sure. So that's the kind of way I look at it. Like I said, like me, it's like if I can get 6.5%, I'm down with it. I'll buy it. I don't want to buy at 7%. I know it sounds kind of it's kind of weird, but it's like I can just wait. I just see the market come back down to 6% anyway. I think once we see the market slash, I think we'll see a market slash this year. And I honestly think I still have not ruled out that we might not see like 2 back-to-back months of like a slash of some sorts, just because of just today's like obviously today's CPI reports alone, and obviously with unemployment numbers creeping up, which again 4.1 is not bad either. Like 4.1 is not bad, but we have to see that kind of tick up. If we continue seeing that, I honestly think we could see 0.25 slashes going into the end of the year. And I think at that point we could see mortgages, especially if you have a really good obviously interest rate and you're buying whatever. I think we can see mortgage rates back down into like the 6% area for sure. In terms of like, I wouldn't doubt it if we don't see some banks like out of nowhere like start trying to offer like 5.9 or something like that, right? So that's kind of the way I look at it. It's like, look, if I can get it like 6.5%, and then I just, just refinance later if we see the markets go back down again in terms of like interest rates. It's like people get scared of like refinancing for some reason. Like if you want something and it's out there, just get it. Yeah. You can just refinance, and again, you have to be able to afford it. Obviously, like make sure you're not spending like 50% of your income on your house, for God's sakes, because that's just going to spell disaster usually. But like overall, like, if it's something you want and you can afford it right now, say if you can get like an interest rate like some of these banks are like a 6.8 or something like that, like go ahead and just grab it real quick and just refinance in a couple of years when prices go, when the interest rates go down a lot more.
Rich is at 2.85% right now.
It's a what again right now?
So Rich is saying that his mortgage is at 2.85%.
Oh, yeah, Rich. Yeah, I know you. I remember you bought that. I remember when you bought that in Dunedin, right? Like a few years back. I remember you talking about it too. And that was back when interest rates were ridiculously low. Like it was crazy to see banks like giving mortgages under 3%, like a 30-year rate too. I was just like, what is going on? But at the end of the day, like nobody wanted to buy out of nowhere, obviously because of the pandemic. Somebody knew what was going to happen. So people that could take advantage of that and were like, I don't really care right now. I'm just going to buy because it's so low, like 100%. I don't blame you. That's what, obviously that's what me and Nicole did too. So when we bought the house here in Florida, and like I said, like, right now, like obviously we bought land, and like I said, like if I wanted to refinance it later, I could just refinance it later. Like I'm not worried about the interest rates being up that high forever. But again, historically, if we're looking at historic averages going, back to like the 60s or something like that, like when you're looking at historic averages, still 6% is not bad historically. But we did get, again, kind of pampered by the 2008 market crash, which made, interest rates go low for so long. It was crazy. I honestly thought interest rates would go back up before then. They just never did. They never recovered back up to where they, were historically. So, and like I said, 5% is great. 6% is okay. But obviously, if you had like say I want to buy 6% or 3%, like I think we're all going to pick 3%, 100%. But you got lucky there, though, Rich. You got lucky there, man. And you're in a good spot in Dunedin too. Like you're right off the beach. Like that's a great spot for 2.85%.
You guys want to quickly talk about Tesla and the big dump Tesla took today?
Yeah. Oh, boys. Oh, no.
Look at that.
God, man. Yeah, honestly, like I was like thinking, like, are we gonna see like a dip, right? Like I was like, we're gonna at some point because we had this like good up push, obviously on the 9th.
Yeah.
And then we're like, a couple of days later, then we're like, we're gonna give all of that away again.
Eddie is saying it's because he bought yesterday. Yep, Eddie. Whenever you buy, it goes down the next day. That's
yep. Honestly, that is how it happens usually. It's so bad, but. just like Eddie, you just got to continue buying, man, over time, and it doesn't really matter. It'll all even out, especially if you're long term. And obviously, if you're short term, then that kind of like that does kind of stink. But if you're just a long term investor, like most Americans aren't cheap. Like you didn't buy an options trade, thank God, because that would have been terrible. So at least it's just like you just bought regular stock. So at least you can just continue buying it, over the next 10 years, and I think you'll be perfectly fine.
You know what's so fascinating about why it went down today is there was a report Bloomberg did which said, okay, the robo-taxi event in August,
right here. Yep.
they've pushed it out until October or something, just to give
imagine.
themselves more time to get shit together. But what's interesting is if you remember why and when Elon announced this 8/8 robo-taxi day was a few months ago when there was a report that said Tesla was scrapping its Model 2 car, which is like their compact $25,000 sort of compact car. And Elon basically went on Twitter/X and said, no, these are lies. But he didn't say that they weren't not scrapping the car.
Yeah, literally, yeah.
Right. And then I think he was just sitting taking a shit on the pot, and he literally just tweeted robo-taxi event 8/8, let's go. And I think his team found out via his tweet that, oh shit, we have to build a robo-taxi by 8/8.
Yeah, he gets him in trouble a little bit.
Yeah, I think that's exactly what happened. And then his team eventually went to him and said, dude, we don't have a robo-taxi. Give us a few months to build a prototype. I think that's what went down.
No, 100%. I can't count on my hands and toes how many times I'm pretty sure Elon's got them in trouble with just spouting off a certain number, right? He's like, this day, this is gonna come, and it just never comes. And you're like, yeah, you're kind of shooting for the stars there, Elon. Shooting for the stars, man. But he says those things, it gets everybody hyped up, so everybody goes and buys the stock. And then when it finally gets revealed, it gets closer to, and he's like, it's not happening, and everybody dumps the stock. It's like, come on.
Remember, they announced the Roadster in 2017, and they were taking deposits for 50 grand in 2017. We are in 2024 now, 7 years later. There is no Roadster. It's still coming next year.
Dude, the Roadster, God, I don't even want to talk about the Roadster. I was honestly, when the Roadster came out, when we first talked about it, I was so hyped about that. But now it's like a myth dream. I'm like, yeah, it's never happened.
Yeah.
That is kind of crazy though, because I was actually talking about the Roadster the other day to some of the guys I know down here. It's obviously every city has a Tesla club. Yeah. But I was talking to some of the guys that I know that are in the little area over here in Tampa, and there's a lot of us, but we're talking about the Roadster in general. And I was like, it's a week ago, but yeah, I was like, man, every time I talk about it, it seems like it gets further pushed out, so I don't even talk about it anymore.
I know. Yeah, I canceled I got my deposit back.
Yep, I did too. Don't worry.
I don't believe you, Elon.
I don't believe you.
I think that's what happened with this robo-taxi days. Literally.
I think so too, 100%. I think it's just going to continue getting pushed. I just don't think obviously there's some robo-taxi stuff out there, right? That there's some things out there what is it, Waymo or I can't remember the exact name of it. There's some stuff like that, obviously in certain cities, but I just feel like we're kind of far off from that. It's just people that are investing a lot of money into those robo helicopters, right? Mm-hmm. It's supposed to take you from say or Miami to Orlando or from San Francisco to LA, whatever it may be. I just feel like we're so far off from those. Man, I don't know if I'm gonna put money into them yet. It sounds cool, and I'm sure it's gonna be cool one day. But that day could be when I'm old and gray. So.
Speaking of that, I think there's a few other trends with JP Morgan that are worth noting. So I know JP Morgan doesn't make a lot of money from its wealth management division. I think it's 12% here.
Yeah, it's something.
Yeah, it's 12.5% is asset management, but there are other firms like Goldman Sachs, Morgan Stanley, Merrill Lynch, or who owns Merrill Lynch now? I don't know if they're still private. But anyways, my point is that if you look at our parents' generation, a lot of them used wealth managers to run their money, right?
Yep.
And it was very traditional. You go into a fancy looking office, you meet a guy dressed in a very nice, expensive suit. You know, the office looks nice, the guy looks professional. And so there's a certain amount of like trust here that, oh, they're not going to screw me. And they got
Yep.
away with charging crazy fees, like 1% of assets under management, which to me is like roughly 20% of your annual profits are going towards this random guy that really does
Yeah.
nothing. Um,
It's just kind of crazy to think about somebody to pay that
yeah,
much money, right?
right.
It's like, but back then, like a lot of people really didn't know better either, right?
Sure.
So people are
But I
like,
think
well, that's
what's
what we have to
interesting,
pay, right, to do that.
yeah, but I think what's interesting is over the next 10 years, a lot of, um, oh, we got another fan. We got Zachary.
Oh, let's go. Zach, hope you're doing well, my man.
So I think
Hope
there's
you're doing
there's an
well.
interesting change happening, right? Which is people our age want to manage our own money, right? Like we want,
Yeah.
even if we're just buying an S&P 500, like we want to be the ones that hit that buy button and hold it, and like it was my decision. I'm smart or dumb,
Yeah.
but I did it, right? And
Yep.
so if you think about just generationally, like with baby boomers and the amount of money that's going to get transferred to their kids and then their grandkids, and what are the kids and grandkids buying that is different from their parents and their grandparents? One is they're not using money managers. Like I don't know of anyone who's in their 20s and 30s that is excited about their money manager or even uses one. They're all
I
just
don't use one. Like
embarrassed
I
that they use
said,
one.
most of my overall money, again, is in the overall market, and I do have certain stocks, like I said, but like most of those stocks to me are like, somewhat what I see. Like I wouldn't, you can't call any individual stock a safe play, like really, but like I feel like most of them are safer plays. Like
Sure.
I'm not, like obviously Tesla is like a stock that I guess is like a volatile stock that I have money in, but like again, to me, like I see that as a win, like 10, 15, 20 years from now, because I'm not going to take my money out of the stock really. Again, the only time I ever do that is if I'm buying calls, right, or something like that. Or maybe every once in a blue moon when I do like a swing trade. But for the most part, like most of my money is again, like you were talking about yesterday, is just in the market, and I just let it sit there.
Mhm.
So I'm not really worried about the short term. Like I don't get worried about it. Like when I first started investing, like I'll be honest, like yeah, I was fucking sweating bullets. Like every day, like sitting there watching, the stock prices go up and down. But after a while, like you kind of just get hardened. You're like, yep,
Mhm.
it's a bad day, but I don't really care. I'm not even looking at the market. So it's like whatever. I'm just gonna put money, whether it's like once a week or once a month, and put money into the market, overall market. I'm just gonna let it sit. That's kind of the way I look at it, I guess.
Smart man. Smart man. I wish I had your discipline.
I used to not have this discipline, I'll be honest. But when I first started, like I was, like I said, I was sweating bullets. But I feel like, especially like when, we've had a couple market crashes here or there, like I feel like, even like, we had a tumble even back when like, say, like, I think it was like what, 2018, 2019, somewhere around there when the market kind of tumbled a little bit when inflation got to like 3%.
Hmm.
We had a market tumbled in, like, and like I was like, well, like might as well let it ride. So I've had some areas like where I get scared, even like with the pandemic, right? Like markets crumbled, but it's kind of, I was like, probably like, scared, on those days too. But I feel like overall now I'm just like, if we have a market tumble, I'm like, all right, it'll come back. I try to just do the whole like look, over the last 5 years and like see the
Yeah.
stock price gradually going up. And I'm like, I'm not touching this money anyway for the next, 5 years at least,
Yeah.
and mostly probably 15 at least. So like, I'm not even going to touch it anyways. What's it matter short term?
There's an infamous study. I don't even know if this is true or not, or if it's like an urban legend, but it's very popular, which is Fidelity conducted a study to see who are the best, like, performing sort of investors.
Yeah.
And there's only one group that beat the S&P 500 buyers. If you just buy the S&P 500 and forget about it, there's only one group that beat that group. And those were the dead people.
Well, hey,
Or people who had forgotten that they had an account at Fidelity and just like, let it ride.
yeah, I mean, I'm sure there's people out there that just, I'm sure there's somebody out there that just forgot their Fidelity account, right? They're just like, you just forgot it. Because there's people out there like, obviously, like even the government, right? There's like sites you can go check and see if the government owes you money. So
Yeah.
like, if you're on top of your money, you probably know the government owes you money. But if you're just like one of those people that go through life and just like don't care, because there are those kind of people. I've known those kind of people. Like, I'm sure there are definitely some of those people that the government would owe them like $1,000 or something. They would just never know it.
Totally.
There's definitely a lot of those people out there. So I'm sure there's a lot of people that just have a Fidelity account that just didn't know it, or they did know it, they just totally forgot about it.
The other interesting thing that young people do now that is different from our parents is crypto.
Oh
And
yeah,
so,
100%.
like if you're in your 20s and you're a guy, chances are you have some crypto, and it just like it's the new gold, or it's like whatever you want to call it. But it's just very interesting that just to think about like these trillions of dollars that are going to get transferred from baby boomers to their kids and their grandkids. Like some percentage of that is going into crypto.
Oh, 100%.
And it's a very long-term secular trend. Like that's not going to change like over the next 10 years.
Nah, I think it'll get more popular, if anything, with the next generation, because obviously that generation's having kids now. So like, that generation is coming up from them, like they're going to be even more like, pro cryptocurrencies. So, and especially especially the big three in general. But like, I don't, to me at least, like I said, like I always get kind of scared too, because obviously we've seen a lot of crypto, places, even like say like Voyager, or there's plenty of other ones that obviously fell too on that so-called, crypto run or bank run, whatever you're going to call it. And that's the reason why I'm always like, yo, just put your money, like put your stuff in like a cold, storage or something like that, right? Like, don't have it on some chain. I don't care how big you think the chain is. Like, I'm not putting my money on that chain. It's just not happening. I get scared about that in general. So you got people like, have, whether it's on certain stock places, like, even like Robinhood or Webull or what is it, Moo. Any of those, like just the ones that just came up in the last like few years, they'll put money on there. But honestly, I probably feel more safer with my crypto on there than I would some of these like crazy crypto exchanges.
Sure. It's interesting.
I don't want it to be on any of that.
I guess in crypto, buying Bitcoin is the equivalent of buying the S&P 500 in stocks.
Yeah. No, 100%.
You can buy shit coins, which is kind of like buying SoFi, or you could buy, the S&P 500, which is buying Bitcoin. But all the action is in SoFi and the shit coins. And so.
I mean, it's true. I mean, it's so true, because again, a lot of these like weird little, like coins that pop up out of nowhere, like everybody goes and buys them really quick and then they dump them really quick.
Yeah.
And then like people are like, why did I lose money? Well, you didn't dump quick enough. It's like, yeah, like, I don't know what to tell you. And then you have like coins, like even like a, like a weird coin, like, obviously we can talk about like Doge, right? Like that should probably be way down there. Like it's like nothing, but again, it's so memey and in the meme culture now. It's like the mainstay, meme coin at this point. So somehow it still has, remained relevant even after the 2021, bubble pop with it. So it is kind of crazy to see a lot of those type of coins. But again, like you said, every day there's like another coin, popping up. Just like we were talking about like yesterday with like, Hawk Tuah coin. It's like, I'm just over here like everything becomes a cryptocurrency. So if it's a funny joke, it's a cryptocurrency, or you can expect it to be one.
Tomorrow's stream, I think we should do politics. I think we should do not talk about politics, but we should do what happens to the markets if either of them, like whichever wins, like what's the way to play this? Because I
personally, I think, like, honestly, I'll be honest, like, just to get a pre, I think it doesn't matter. Honestly, I feel like the stock market's going to do stock market things. Like at this point, it's became so like its own powerhouse that I just don't know like which way, like, either one's really going to move the needle enough to, whatever. But there could be like obviously some movements for sure. But I just think those are going to be short term. That is overall, I think the market's going to have the uptrend though.
Well, so there are some key differences, right? Like for example,
definitely key differences.
Trump recently, I think he's kind of done a pivot on this because he wanted the crypto bros on his side. Has gone all pro crypto.
Let's be honest. Trump does that a lot, though.
No, of course. He'll say whatever he has to say to get elected, right?
Yeah, I think he'll do the exact opposite. I mean, it's Trump, so like, you can't. Like, nothing against Trump, like I said, but it's just hard to trust him. It's hard to trust any politician. And I know he says he's not a politician, but let's be honest, he's a politician. I mean, he was going to run for like New York governor in like 2014, if you remember that.
Yeah.
So like, the guy is a politician in his own right mind. So he's going to say whatever, just like you said, like he was going to dump crypto. And then, there's so many things in the past that he said he was for, then he's against, and he's for again. It's like, come on, man. Like at this point, like everybody should know, like you can't trust like what a politician says. Like it doesn't matter if you quote unquote, haven't been a politician your whole life. Like when you're in that big of a business, it's, it's politics in its own right. So yeah. And again, that's really what I look at it, at least in terms of like, like you say, like obviously people are going to take him by his word, but he's probably going to do something in the middle somewhere where he tries to make everybody somewhat happy. The issue with Trump is that he's so erratic with certain things that I feel like it gives markets uncertainty at sometimes. So he's so erratic and so uncertain. It's like sometimes it builds. And again, I think we both know that markets hate uncertainty. So I think there's just like a bad side on both sides. I will say, obviously, like if you look at historical averages, like, both parties do, pretty decent in terms of market overall, like, in the past times. That's the reason why, for me, it's at least when I say like the markets, to me, at least in terms of like who gets elected doesn't matter as much. It's especially just because like 2021 with the pandemic, or 2020 with the pandemic, we've seen, markets crash for a second, then it just was like full train ahead. It didn't really matter. And then we see markets come back down again in like, 2022, but then everything was like, okay, in 2023, everything's like, we're going back up again. We don't care, like it doesn't matter. So it's like, it's so resilient. I just don't know if like either party's going to move the needle as much as like maybe, like I think maybe once would have, if that makes sense.
So here's a very specific trade. Actually, let's hold on. Let's wait for the bidding to finish. And then I'll give you a very specific trade.
Yeah, let's remind everybody real quick.
Sorry?
Yeah, I'm just remind everybody quick. Guys, if you guys haven't, come over to stonks.com to enter predictions. So tomorrow we'll have another game. It's a $100 game. Starting next week, though, you guys can win up to $1,000. And this money could be split, too, if you have multiple winners. So don't think that, hey, look, only one person's going to win the chat. There could be multiple winners. That money gets split. And also, if you guys want to get multiple entries, all you got to do is share the link in stonks.com. Once people click on those links and make accounts, you guys get more things, right? So you guys can enter more. If you guys don't know, obviously, Stonks.com, it is going to be a new live stream service in the financial markets. We're also doing some awesome games. And again, those games are free and you guys can win actual real money. We're not talking about giving you guys Dogecoin or some, weird cryptocurrencies. Nothing against cryptocurrencies, but I know that kind of gives people like the wheezies when you say the free money thing, is people automatically think we're giving you some like weird crypto token. And we're not, so don't worry about that. We're giving, good old USD, and it's, good. It goes right into your bank account. So, yeah, I'd love to have you guys over here. If you guys haven't, come over and make make an account. Super easy. It's free to do. And again, it's going to be a great community that we're building, and it'll be here for the long haul.
All right, I think they're catching the price and inputting the price.
Nice. Okay, prices are coming in, so you guys, winners should be up in the next like minute or two. So you guys will see at the bottom, you'll be able to click and see who's the winner. You'll obviously see multiple winners. It'll show that as well. And we can also announce winners too if you guys don't see it, but you'll see it there if you've won or not. And like I said, today and tomorrow, $100, and then starting next week, we're going to up this to $1,000 a day. So,
yeah. Funny, I keep my dogs outside while we're doing the live stream, and then
yeah. I'll take this off and stop sharing on my end.
And they're out there crying and complaining.
Yeah,
let me bring the dog in.
Let me in, Dad, please. Yeah, you're good. You can bring him in. Man. Yo, what's up, though, Zach? Hope you're doing well, man. Rich, as always, I know you're doing well, so yeah, man, if you guys haven't, come over and make a free account on stonks.com. It's going to be an awesome place. You guys can win free money, so you guys don't have to pay anything to join or anything like that. Murdy here, he is one of the founders. He's also the founder of Streamlabs. If you guys know Streamlabs, I know some of you guys do. So, yeah, it's awesome. Oh, look, okay. My wife won something.
We have winners.
My wife actually won. That's funny.
Nice.
Yeah,
I actually won first place today.
You won first place? Yeah, don't worry, guys. Murdy, he's cheating on the back end.
Yes, I can't actually win this money, so
yeah, we can't win, guys.
We can't win.
We cannot win.
Go towards tomorrow's prize pool, and so we're just going to if you work at Stonks, you're not going to win money. It's just going to roll into tomorrow.
Yeah.
But intellectually, I find it satisfying.
No, it's fun. It is fun though. Like I said, when you actually do win, so it's like, hey, when I was winning, I was like, yeah, this is awesome. I don't even care about the money part for us, but it's like super fun still. It's still a fun game. But like I said, you know, anybody can come and play. If you're not, as long as you're not, you know, working at Stonks, then you guys can win money. And you guys, we're hooking it up that way. You'll have it in your balance, and then pretty soon you'll be able to check that out and do the transfer to your bank account. That way you guys can get the money. But for right now, it'll be in your balance. Do you know any updates on that, Murdy, when that's going to be live, like maybe next week or the week after or something like that?
Yeah, I think we're just waiting on a third-party API that does.
Okay, got it.
So the plan is to have Visa gift cards emailed to you.
Yep.
And we're just waiting for verification.
Oh, that makes sense too. Honestly, that's even better. Yeah, I actually like that. Yeah. So yeah, you guys will get, you know, Visa gift cards, which is even better then. Then you don't even worry about connecting, you know, certain stuff or whatever it may be. It make it even easier. So
yeah, and that way we can support people in different countries, right? Because
yeah, that's a good idea too. Yeah, that way if somebody like say, you know, Europe wins or something like that, it's not some crazy thing. That actually is a really good idea. So more people can win, more people can play.
Mm-hmm. Yep. Sweet.
Which is a good thing overall. Well, hey, it's been a great stream. If you guys enjoyed what we're doing here, like I said, we're going to be going live every day on stonks.com, Monday through Friday. Obviously, if you guys are watching from my old channel as well, you guys are welcome to come over to stonks.com and make an account. Love to see you guys over here. Like I said, we will be live again at the same time tomorrow for our Friday stream. So hopefully you guys can come and join us on the daily and help us grow this this channel, and also just overall help grow Stonks. That way we can be a pillar in the financial community.
Sweet. And I will save my prediction or my one like very specific
or
trade to do for tomorrow's live stream. We're going to talk about Trump versus Biden. And what stocks to buy and sell, depending on
100%. There's a lot we could talk about in terms of what stocks to buy or sell for sure. Honestly, let's talk about that a lot tomorrow. That's gonna be fun because I can think of a lot of stuff to talk about as well. I know you do. And whoever else joins us tomorrow, we can all break it down, have a lot of fun talking about it. But yeah, it's been a great live stream today. Hope you guys enjoyed the Stonks podcast at this point, aka the Stonks Daily. And like I said, we'll be back tomorrow. Every day you guys will see this Monday through Friday. Come over to stonks.com, make an account. You guys can enter predictions for the stock price that day. Each day we'll have a new stock. You predict the price is going to be at 4:30 p.m. ET or 1:30 p.m. PT. So you guys can, guess that. As soon as that happens, you'll have the winners pop up at the bottom. And like I said, it's free to join. Starting next week's $1,000. Tomorrow's $100.
All right. Thanks, everyone.
Awesome. Thanks. See you guys later. Bye.